you've got $50,000 in equity. That's your ownership. That's your skin in the game. Now, most people think equity only matters when you sell, but here's the real secret in real estate investing. Equity is borrowed against. It's like a savings account that you didn't realize you had. In real estate investing, guys, equity is not something you brag about. In real estate investing, equity is something you use to your advantage quietly. Okay? That's why if you find a house that's priced lower, but the market price or the market value is this, that's equity that you're getting that you didn't have to put any physical money in. And that's what it's all about. If you'd like me to drop a full video on building equity fast, just drop a comment below with the word equity, man, and I'll start building that first. Let's get to number 2. Guys, I'm gonna run through these real fast because again, if you got questions, all of my information is in the description. My website is in the description. You can get to me that way. Number 2, let's get to cash flow. Cash flow is the money left, basically, it's the money left over after all the expenses are paid each month. Okay? Your tenant pays $1,200 in rent. Your mortgage, taxes, insurance, and repairs total $1,000. That leaves you $200. That $200 is your cash flow. Now imagine if you got 15 properties, 20 properties, 30 properties. It's the same metric, guys. Think of cash flow like your property's paycheck. If it's positive, your investment is working. If it's negative, you're paying to own it. Subscribe, guys, if you want me to show you how to calculate cash flow before you ever buy property so you never get stuck with a money draining rental or a money draining vacation rental, Airbnb, Vrbo, and that kind of thing. Because at the end of the day, guys, the only reason you're doing this is cash flow. Cash flow is the oxygen of any business. And if you can get cash flow projections correct and they line up, real estate investing becomes a lot more fun. Now, number 3 is one that a lot of people struggle with. And I want to make sure that I want to make sure I got this one in as quick as possible, just in case you guys don't watch all the way through. Number 3 is cap rate. I like to tell people this is probably one of the most important things in real estate investing. Cap rate or capitalization rate is a quick way to measure your rental property's potential return that if you bought it in cash. Okay? If you make $10,000 a year from a property that costs you $100,000 to buy, your cap rate is 10%. Think of it like a report card, guys, for your property. Higher cap rate equals stronger return. But be careful, higher doesn't always mean safer. Okay? So remember, guys, if it costs you, if you getting $10,000 a year from it and it costs you $100,000, that's a 10% cap rate. The higher the cap rate, the better. Okay? So one of the things, it's just a stronger return. Now, don't mean those properties are not going to come with issues, but it just means your cap rate is strong. So now you understand why investors are always trying to get that price way cheaper. So if I list a property for $500,000, there's going to be an investor that calls me and says, "I'll give you $350,000 cash right now." Right? They trying to buy it for cash so that the cap rate works out. Okay? That's the difference. Okay? But think of it like a report card, guys. Okay? That's the way I want y'all to look at it. And all of us got report cards growing up. Do you want to bring a report card home that's good, or do you want to bring a report card home that's bad? If you want me to share a free calculator that helps you figure out cap rate without pulling out pen and paper, smash that like button and then go ahead and email me at jeff@buynowsellnowrealty.com. I'll pop it right over to you guys so you can have it. Number 4, this is a big one because this is when you're dealing with banks and when you're dealing with private investors. This is number 1. This is one thing they're going to want to talk about. ROI, or return on investment. ROI tells you how much money you made compared to what you put in. You invested $10,000 in a property and it earned $1,000 profit in a year. That's a 10% annual ROI. It's that simple, guys. I think what y'all are seeing is a lot of people shy away from real estate investing, or they get into real estate investing without realizing these 10 things you got to do on every property. Okay? ROI is the universal language of investing. I don't care if it's stocks, real estate, crypto, whatever. It's the universal language. It works the same whether you're talking about houses, stocks, or even buying and reselling sneakers. Right? Drop a comment with the ROI you'd be happy with on your first deal. Is it 5%, 10%, 15%, 20%? Because that's one of the goals you got to have in, because that's after you cover all your expenses, how much do you want to be taking away from this property?